Hello. Oil prices rose this week whilst gas and electricity prices eased. Let's take a look at the week's movements in some more detail. Brent prices rose on Monday following announcements that Russia will speed up its production cuts this month. The Russian Energy Minister Alexander Novak said at the end of March, early April, Russia will have reached the planned reduction of 228,000 barrels per day. Prices continue to climb on Tuesday as the US and China seem near to agreement over trade tariffs. The weekly EIA report on Wednesday showed crude inventories rose by 7.1 million barrels compared to the previous week and are now around 4% higher than the 5-year average for this time of year. The bearish news countered the ongoing bullish pressures from earlier in the week and prices actually closed flat. Friday was a directionless day for prices. Front-month Brent closed at $65.85 per barrel, up $0.85 per barrel compared to last Friday.
Despite 2 LNG deliveries in Sierra Grain last Saturday, LNG output on Monday was reduced, leaving the system short for most of the morning. As a result, prompt and near-term prices rose. By the afternoon, the system gained length, which pressured prices back down. Prompt prices closed the session higher, whilst longer dated contracts settled around 0.1 pence per firm lower. The system was comfortable throughout Tuesday's session as demand fell from Monday's levels. With weak demand from Asia, northwestern Europe remains an attractive destination for LNG supplies. There are 4 additional cargoes expected to berth in the UK by the end of March. The positive supply news pressured all prices lower. Prices continued to slide throughout Wednesday's session, again on healthy supply-demand fundamentals. Weakness in coal and carbon pressured longer-dated contracts lower throughout the day. Thursday's session started off in the bullish territory, however all near-term contracts closed the session lower, whilst longer-dated contracts closed relatively flat. Last night all contracts closed lower than last Friday. Q4 19 lost just over 1.6 pence per firm, while Summer 20 lost 1.1 pence per firm.
Power prices rose on Monday in contrast to gas. Prices were directed higher by stronger coal and oil. Coal prices then eased on Tuesday as the US dollar strengthened. As a result, power prices softened throughout the day. Then throughout Wednesday and Thursday, power prices tracked the movements of their gas counterparts, as well as taking downward direction from coal and carbon. Last night, most curve contracts closed lower than last Friday. You can download the full version of this report from our website. Thank you for watching and we'll see you next week.